Good morning, good afternoon, good evening, wherever you are. This is Jimmy doing another update in the series. This is more really for personal use and for my friends, and gives me a little bit of a record on what I'm doing and things to reflect on regarding the stock market. Well, let's just call it the gold and silver markets, stocks, and both the commodities. And you're looking at the FinViz screen, which is one of my, actually I'd say it is my favorite source. And I just happened to open up the portfolio. We can start there. Looks like in December 15th of 2010, 15 years ago, I started a portfolio of lithium stocks. I think I keyworded off of lithium, and just some real interesting things here. The company's Johnson Controls up 200%. LIT, Global Lithium and Battery Tech, up 191%. And then the rest of the portfolio, these are the stocks I picked to as a model to buy. This is what I found quite interesting here was FMC just in the last day, I think Thursday, just got walloped by half, took a nice haircut here. Agricultural products or inputs. I thought this might be a distribution company, but let's take a look at this stock and see what the news was, just out of curiosity. You click on the symbol and you get a chart, and we look at it's a $190 billion company with an enterprise value of $5.97 billion, $3 billion in sales. So all I see is a lot of red here, and I'm wondering why. So you can scroll down and have a look at the news, the downgrades. Friday's Wall Street upgrades, downgrades. Why FMC was cut in half this week. Missed expectations, asset impairments, and write-downs in India. Management slashed the dividend by 90%. Well, that'll do it. They plunged 47% this week as of Thursday. Earnings report, investors didn't like it, and feeling competitive pressure. So, if you're one to buy blood in the street, it says looks cheap but could be a value trap. So this is a Motley Fool article. I'm not too fond of them because they do okay. But enough of that. Let's go to the good stuff. Right here we have the leveraged ETFs. This is a little mini portfolio that I'm in. Actually, I have no positions except for one small position in JNUG, which is a Junior Miners Index 2 times bullish. And this is the 2 times Gold Miners Index, which are the bigger cap companies. This is AGQ 2 times silver. These have been some mainstays of mine for many years, and make a lot of money in these guys. As you can see, I was buying it here down in the 70s, or I had some in the 70s, and bought in here, traded, and so forth. All three of these names. If we look at the screen now, okay, let's just take a quick look. So we have dropped from $200 to $140 a share on JNUG, and from the mid 190s, let's say, to 132, and AGQ fell from near 100 down to 80, 20% haircut. So what's going on? Are we going to go higher from here? Are we going to go lower here? It looks like the 50-day moving average, which is this orange line, you can see that here, has attracted these equities. Silver is relatively a little bit stronger. No, I'm like I said, I'm out of these things. I was able to buy down in here and sold there and bought back and traded and this and that, but it's can be mind racking. So let's look at the gold stock group that's found on FinViz, and we will sort by change first. AUC Allied Gold, a $1.8 billion company, big haircut today, 12% down. BTG Skip Goro, another one that's getting a little bit, quite a bit of a haircut. Probably should have sold this one up there. I thought it would hold up, but I don't have much in that one. AUST is a very small company. Probably didn't warrant the move upwards, down 6% here on Friday. Now, IDR is one that I purchased. I am long from about 30 bucks. HYMC, etc. So these are the names. Now let's look at the winners. So we come over to here and click on change. And this, what I look at also in this screen is we have 3 pages, or roughly 45 stocks or so, and I look and see how many are winning and how many are losing. So today was kind of a big loser day for the precious metal stocks. If you watch this page or work with this screen of gold stocks every day, you become to be pretty familiar with them. Let's just flip through the list and see what's happening. Not too much in the big caps, and then the third page, still the big losers are down here, bigger losers I should say. So if we look at the charts, let's go reverse the screen to the weakest ones first, and then we'll look at the charts. You can find the charts here. This is the submenu for all of these stocks. You can look at all of those and see. So on the charts, we got some clues, is how I'm looking at it, that today's losers are starting to look really bad. Now, does this portend that all of these stocks are going to drop like this? Maybe. But it gives a nice visual clue of what can take place. I'd like to see them fall more, although I do nibble on some of these guys. I'd like to see them fall more so that I can go in and buy my beloveds, the leveraged ETFs, JNUG, lower. You know, could it go down to 100 and take a 50% haircut? I don't know. Who knows? But this screen here, looking at these guys, especially, this is a big company. I have shares in this. I have a couple thousand shares of B2 Gold. Never thought it would get whacked. But let's see. Excuse me. Oops. So what was the news? This one, it's not a big profitable one, but it's a nice ride. Their earnings per share, or earnings quarter over quarter, are up. And another thing to note here is how much debt do they have. Most of these companies have very little debt. What's the news? Stock sinks as market gains. What you should know: declares commercial production at Goose Mine. Let's see what Zacks is saying. In the latest session, closed at $5, down 6%. It's a story from the 17th. Now, they don't really say much. In any event, let's move along. Okay, back to the charts. So another way to look at these gold stocks, if you're just into this whole story, we can go into the valuations, sort it by market cap, and we'll find the biggest ones at the top, Newmont's, and then I like to again look at the charts, see how the big caps are doing. Then what you see is a pullback right here to the 50-day moving average. Now these guys should be making a lot of money. They should be, their earnings are coming out next week. Some of these big ones, I don't know the names at this moment, but most of these are reporting earnings now in November. It's November 1st today. Okay, those are the big billion-dollar outfits. We expect that once gold continues up with all of this monetary debasement, that these would, this is like an A, B, C, and then a higher leg, D, would be the story. Tim Ord talks about a 12-year bull market in gold based on some monthly indicators and ratios, which we can look at another time. You can find Tim Ord on Tuesdays and Thursdays. Look up TFNN on YouTube, and you'll see his conversations. So I like to just watch these and see what's happening. See how many are maybe breaking these trend lines. These are looking somewhat weak, and that's about all I have to say about that. So if we jump into the Thinkorswim platform, formerly Ameritrade, now Charles Schwab, and most importantly on these gold stocks, this is the GDX, which is the big cap ETF fund. And what I have here is the 1 hour chart. Each of these bars is 1 hour. So there's 1, 2, 3, 4, 5, 6, 7, say 8 trading hours in a day. And then these are the overnight time frames. And interestingly enough, Schwab allows trades overnight now. They maintain their own market. And I think other brokers are doing that. So you can now buy, sell, trade these ETFs overnight. So what I'm seeing here in this 1 hour chart is the True Strength Index. Again, one of my favorites. That I created this dot story here. The way I displayed this is as a dots overlaying the chart. Looks pretty neutral, and you can see the stocks are just trading flat. They're right here at an ABC target in the 71 area, and this is a little down target of 70 on GDX. So right now this looks somewhat weak. If we go into this and we add more time so we can see more of the data, we'll go with, let's just say 180 days, 1 hour, and see what that looks like. So what this is saying to me is, again, what was really interesting was how this sell signal, or this topping area, gave a pretty good call on when to get out of the GDX. Because we could see that things were incredibly bullish and overbought and just getting crazy. And then the TSI led down, continued had a little bit of a break, continued down into this low, rallied back, down into this low, and now we've rallied back up in the indicator and turned over during this sideways correction. Do I think that these can go up? No, I'm feeling like I want to wait till this true strength indicator drops back down and the RSI drops back down to below 30. This is the Stochastics Momentum Index, which it's a little too active for me. I don't particularly get a lot of information out of that. My friend Jack does, of course. So again, on the GDX, let's look again and go up to the 2 hour, and we'll see that the 2 hour TSI has risen up pretty nicely. I mean, this is constructive for a possible rally. This is possibly constructive for a rally as well. Could also turn down pretty easily. And then the 4 hour, and we look at the 4 hour TSI, and it's bullish. This was a pretty big buy signal for me, and I was able to sneak into trades in here. Rode this trade up to a real nice gain. I rode this one back down, rode this one back up, and got out over here, up in this area. So is the TSI going to continue upwards? It looks like it should. Will it pull prices up? That's to be determined. We look at a longer term chart and we can see that the 4 hour TSI really gave a lot of sell signals. And the challenge here is stocks can continue to go up even though the signal is at a high. What was particularly interesting, and I really didn't see this in the at the moment when the stocks were trading here, I didn't really catch this pattern here, but the TSI, True Strength Index, broke lower and portended lower prices. So this indicator appears to be leading and giving a good signal on the GDX for a sell signal. I could have been selling here, I could have been selling here, and I think I did on the way up, did sell things, and I missed parts of this move, but I resolved to buy back higher, which I did in that thing. So let's see. Now the 4 hour TSI, True Strength Index, has rallied up, and it's working off of this oversold signal right in here. So if I'm just looking at this chart, I'm a buyer. I was a buyer in here, and typically you'd hold it until the TSI crosses back down. So we'll see what unfolds here. Right now I am in cash and really not interested in taking much risk because there is a downside target on the GDX of 63.19. So that's a $12 haircut. In the JNUGs, that's equivalent to a pretty substantial decline. All right. So we've got the gold 4 hour TSI also about to cross. This is the GDX 2 hour. We looked at that. And then let's go over to silver /SI. And again, silver has the same TSI cross. And in lieu of all of this busyness, you can see the TSI has risen from this low signal. This is the RSI, and made a nice rally. I mean, it's gone from 45 to 48. are we on the downside? Is the rally in silver over? Well, not quite, based on the conversations of, you can find them on $2 investors or $2 investing. His name is Andy Schekman. He runs a gold outfit, Gold Sales. Miles Franklin is the name of the company. Now, what I find too interesting here is as I do these drawings, here is a 53.64 target, which was hit exactly on, let's look at this and see where this thing starts. So it starts down here, I can't see the B because I've stretched this chart, but the B was probably like right in here, and it gives us a 53 target, which almost matched to the penny. The high there was 53.76. So pretty cool when stuff like that happens. And then this target down here is an A, B, and then a C up. So here's the marking. So we got, but let's draw it again and make sure. So we're up here at A, and let's use this B took us to there. So I'm going to use this A, this B, and this C right in here somewhere. There's a high spot. So that takes us down to 40, which is a target that Ross Clark had in his work. You can find Ross Clark on Thinkorswim, on Talk Digital Network on YouTube. Usually he's there on Saturday. He does a little small update, but I've been following him for years. And we'll take a look at gold. Oops. GC is the symbol for gold. And, here we have gold. Really looks real interesting. I don't believe it fell as much as silver percentage-wise. We were at 43, what were we at? 43.20s, 43.3, 43.6 up in here. And we only dropped down to 39.07. So gold is incredibly strong. Central banks are buying. Guys like Ray Dalio, these traditional investors, are now waking up and saying, well, maybe 20% of your portfolio should be in gold-related issues, 20% bonds, and the rest stocks. That ratio thing they talk about. So if we zoom in a little bit here on gold, we're calling the breakout level right here where this big day was when we got above 30, this whole sideways thing from March to August. It seems like a long time. Gold broke out, where's 2000? Way down there. So we were stuck at 2000. Well, I got the wrong chart up here, but let me just continue. Okay, so here's gold. Overlaid with the True Strength Index. There's nothing wrong with holding on to gold at this point in time. If you haven't gotten any yet, or don't have a stash of physical buried in your crawl space somewhere, you could start dollar cost averaging or buy a little bit each week and build up to an amount that you're comfortable with. I'm proud to say I discovered gold at $400 an ounce, and I was involved with trading these stocks and such, just learning the ropes back in 2004. I bet gold was 400, but I didn't get my big buys in until it went to 900. It was just crazy. So if we look at the maximum amount of time in gold, we go back. This chart goes back to, hang on a second. Let me get rid of these guys here. If we go back to, well, 1977, the low was $100 and $109 down in here. And that's 1976. Still in college. And gold ran up to a price of $757. I guess it topped out around $862 on this futures contract. So we went through a long, I guess, bear market, sideways market, and I think it bottomed at around 200 and something, 1999 during the dot-com bomb. And so over all these years, we got stuck at $1,000 right in here, round number, broke out to that, went up to 1820 in 2011. That was a big move. And so I was a buyer, I guess, at 900. Took me from 400 here in 2004, right? Yeah, $400, 2004. And then it still took me till here, till I finally got in and got some physical. So the chart looks pretty benign at this point. It doesn't look like any major, a major move here. But now we can say gold has outperformed the stock market over the long term by far. Okay, let's see what else we can look at. Let's just look at gold daily for 3 months. Each of these is 1 day. There's targets down in the 3,700 area. We'll see if we get there. It'll be a nice buying opportunity. We got this target longer term, 4,000, which was definitely broken. The negative on this is the daily true strength has crossed and is going to move down. However, the 4 hour, as we looked at before, 30-day 4 hour is the opposite. It wants to turn up. My thinking is that this may roll over and do another test. If there's any weakness in gold, the true strength index will move lower, or actually pull it lower. So let's just see what we got for ABCs. Just ballpark A, B, C, A, B, and C. Again, 3804, this ABC, we come down, draw A, B, C. I think the high is here. 3798, 3804. So we'll see what happens with gold. Don't have much else to share this morning. Let's see how much time's gone by. About 28 minutes, not bad. And we'll just conclude at this moment. And maybe I'll end with some photos. Thanks, and have a great day. I'm Jimmy. You can call me at 907-830-8198 if you have interest in talking about this stuff. Okay? Love you guys. Bye-bye.